How's the thumbnail? I think it's really good. Let's get these risk disclaimers done and we'll start. Peace be upon you. What is the inner part of the thumbnail? Peace be upon you. Wait, I'll show you again. What is the inner part? Which bit? This is, it's a cave. And, yeah. It's a cave and candlesticks. That's what the analogy is, candlesticks. I don't know, I thought it was good. Okay, I can begin now. Messed it up. Oh, the logo. Wait, I'll bring it up one more time and then we'll go through the charts. It's just a chain. Nothing crazy. Just a chain. Okay, daily chart. I accidentally removed all of my drawings this morning, so every new day opening gap, new week opening gap level, gone. I'll have to put them on again, which we will do shortly. Okay, I gave you the bias in Discord this morning that we would look for these relatively equal lows, and that has been delivered. I'm looking at this fair value gap next, but I'm fine if it doesn't reach that, and neutral bias, because my bearish bias has already been delivered. If we want to reverse from this now, we could potentially do that, so I'll keep an eye out. But I can see it going both ways, so I can see it filling in the liquidity void, which is a new week opening gap. And I can also see it just taking out the relatively equal highs, because it left them very, very nicely engineered this morning, so we'll just give it some time. Okay, this is a pre-market model set up this morning. We had these relatively equal highs. If it fails to reach them, it reverses our optimal trade entry. So if we look at this and we look at optimal trade entry levels, 79% retracement, digs a little bit above that, uses the SIBI, uses the mitigation, the breaker. That's a high, low, higher, high, lower, low. So it's a breaker block. Trades into the breaker, trades into the SIBI, creates an inversion suspension block, uses that to trade lower. Institutional order for entry drill, reclaims the bearish suspension block, converts to 5-minute, eventually trades back up into the newly created suspension block, gives us an SMT with ES, which acts as a catalyst to spool all the way lower into these 8 a.m. consolidation lows and the 7 a.m. consolidation lows. So a really nice pre-market model setup there. I'll take all of this though off now because it's not really that relevant anymore. I am looking at the 15-minute SIBI that we've traded away from because we've got very nicely engineered highs all in there. And we'll take those off. Okay, pre-market low. We've got this. had to make a preset for this. And then pre-market high all the way up here. Very large pre-market range. We've got 180 handles, so we'll have to grade this as well. I'll grade it. Okay, now this will give us insight into narrative. Gradient levels, quadrant levels of PD arrays, of ranges, of new week and new day opening gaps, which is a PD array. They are very telling of narrative. So if you have a consequent encroachment and you're looking for lower prices, when you trade up into that consequent encroachment, you can derive your narrative from how we react to it. So if we're very reactive, that can give you the narrative that it's unwilling to trade into the upper portion of the gap. So, or the range, the PD array, which would indicate weakness. So that can give you narrative. Same with new week and new day opening gap levels. Same with any quadrant of any PD array. Hello Sui, hello Zach. Nice to see you both. I'm using the NDOG indicator because I accidentally took all of my new day opening gaps off. This is the lifesaver ICT NDOG. It is titled, or it's called, ICT New Day Opening Gap by Noob Traders. If you want to use that. I never use the SMT indicator. Never, so. Okay, let's look at our regular trading hours closing price. So we're going to have a couple hundred handle gap today. This is the only downside to the indicator. You have to take it off and on constantly. We've got a 15-minute chart. Hourly chart. Really, I'm going in with a neutral bias because I can see it going both ways at the open. The open could just floor it through into the new week opening gap, but it could also rip higher into the relative equal highs, so I'm neutral in that regard. Okay, I'm going to do something a little bit advanced. Rather than use the pre-market range as my dealing range, I'm going to use from the pre-market range high, the pre-market high, into the NWOG high. This is my dealing range that I'm going to work with. It's an unrealized range, meaning this is not a dealing range that's formed out because obviously sell side liquidity down here has not been taken out. We can't use this as a dealing range ordinarily. But if you have an estimation on where price can go, and I told this in my swing grading lecture a couple months ago on this YouTube channel, then you can see here, that's a very good tell that this is a good dealing range to use. So that's a gap that I'm very interested in. Yes, like the stream, like the stream. What's up, Freddy? What's up, Alchemist? Okay, today I'm using the regular trading hours new day opening gap. I'm not using the regular normal new day opening gap. So you know how we normally use 6 o'clock's opening price and 4:59's closing price. Today I'm not doing that because it's a very, very small new day opening gap. If I was to use this, it's only a handle wide, so it's not really that significant. Instead, I'll use the regular trading hours closing price of 4:14 and the electronic trading hours opening price at 6 o'clock. Now that's not the same as the regular trading hours gap because we're using the regular trading hours close and the electronic trading hours open. The regular trading hours gap is the regular trading hour close and the regular trading hour open. It's a mouthful, but basically if you go to the regular trading hours chart and you take the 4:14 closing price, that'll be my new day opening gap high today. It's also going to be the opening range gap high. So regular trading hour new day opening gap high plus we'll do backslash opening range gap high because yeah, it's a relevant level. WITT trader, elite ball knowledge, Larry Williams, ITT. I can see this being a layup for a market maker model, but the new week opening gap is a very strong draw, so I'd want it to trade down here first. But again, neutral bias. I'm not trying to predict it. I'm not trying to predict it this morning. I'm just gonna let it happen. Just gonna let it go.
Já? Dona Madalena? Oi.
Okay, there's our open. I want to see it react with a wick from some kind of level inside of the opening range gap, and then use that to trade lower into the new week opening gap. Yeah, I'm gonna grade this So there's going to be a lot of lines, but they're necessary. Yeah, red's fine. You want to see it hit the lower quadrant, or even better if it falls short of it, and that's a good indication that we're bearish. And then because it's going to give us a strong reaction, the new week opening gap draw would be nice. Pro ICT trader. Why is he cosplaying me? It's a joke. Clinton. So body opens right at the fair value gap high. We swept the pre-market low at 930, 931. If this can be a sweep, then I would flip the bias into the pre-market high. But if it runs through, then obviously that's not going to work. Okay, YM looks like it's about to take off. ES being suppressed, Nasdaq being suppressed. All three have taken out the lows, so if you're bullish, you want to see this become an inversion gap, and you want to see this be a market structure shift. Okay, this could be a layup for a bearish order block. Let that 5-minute candle close, see if it's a sweep. We have a draw on both sides of the market, so is it working now? Okay. Okay, good, good, good. I hate that. I hate it. We should start streaming on TikTok instead. I think it's actually more reliable. Blue Shaded's daily busy. Yeah, yeah. No, 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 no. It's the 4-hour one. Sorry. Yeah, 4-hour busy. Okay, this is good because we have had accumulation occur at, sorry, not accumulation, consolidation occur at the equilibrium of the dealing range that we've got marked out. This is an unrealized dealing range. I said this at the start. Basically, because this is where I'm looking at for my impulse price swing. I'm not using these relatively go highs, I'm using this one because time-based, where does time meet price? Well, price takes out these highs during the New York Open or the pre-market range, so I'm using this high. And then the objective of where I'm expecting price to go is all the way down here. So I'm going from where does price take out buy side and begin our current range, this high, and then where am I expecting it to go, the new week opening gap, high. And you can say the low, you can say the consequent encroachment, I'm saying the high. And that gives you dealing range details like the fair value gap here overlaying the upper quadrant of that dealing range, makes it stronger. This consolidation happening at equilibrium. That is a characteristic you will see occur in every dealing range. Dealing ranges have, well, not every dealing range, but most of the time you're going to see consolidation. If it's going to occur somewhere in a range, it's going to be usually at the equilibrium. That's what you want to see, and then you want to see that get swept. I taught this all in my swing grading lecture. This is consolidation. It sweeps the consolidation. It stays in the fair value gap at the 9:30 open. Wicks into the opening range gap. Sorry, I had a brain blank moment. Fails to take the lower quadrant, and then that's weakness. Weak. Displaces through. Look for the new week opening gap high now. Valric, how do you know which trade I took without me telling you? The continuation sell? Yeah, I know you took it. I would assume you took that at least. Okay, first presented, I would use 935. I'm not using 933. Use 935. Yep, so clean yesterday and today. It is, it really is. How would we go about reading price? General question, but I feel like I just work from the daily down to the 1 hour. This seems like something outside of that. No, I do that. I think because I stopped doing daily analysis in the way that I used to do it in the free Discord, I basically moved that into the private Discord, and then I do a little bit more broad. Like sometimes in trading camp, I'll do, I'll just look at the daily level, or I'll just look at the 4 hour chart. That's because I keep it a little bit more basic in the free server, and then the private server I do an in-depth one. So I think people have got a bit confused, but you still use your top-down analysis. I still did that today. I worked down from the daily chart. I said, okay, we've got this range. We've traded off that order block, as we mentioned in the weekly outlook. Then I went to the 4 hour, and then we had the relatively equal lows. We had the new week opening gap. We had this BISI. Down to the 1 hour, same stuff. 15-minute chart, 5-minute chart, 1 hour, 1-minute chart. It's the exact same. So I'm not doing anything differently. It's just maybe, I don't know why you think I'm doing it different. It's the exact same as I normally do. Okay, we're pretty much gonna reach into this. How many people got sells? Out at 400 from 537. Let's go. From 537. Nice. So you got 137 points. Hell yes. Biggest day today. WWs. WWW. And delivered. Stand and deliver NASDAQ. Thank you. Order filled. Well done. Yeah, really obvious today, especially the 4-hour relatively equal lows. Those are very, very obvious. And then with the new week opening gap. Basically, a new week opening gap that hasn't been filled in yet. We don't need to abide by like a life cycle and say, oh, it's not going to be valid after this much time. If it's not been filled, then it's unmitigated and still a liquidity void, so it's always going to have validity. If we're that close to it and we're not seeing enough strength that we would want to see if we're bullish, then the obvious draw is the new week opening gap. And then beyond touching the high, you can go for, okay, where is the unmitigated portion? Well, the unmitigated portion is from the start of the N walk, and we go all the way up here, but then it's been filled in down to this point. Now we still use the new week opening gap as a whole as a reference point, but the unmitigated liquidity void portion of the gap is obviously here. So that can be your next draw if you're looking to hold it, because this is the liquid. This looks like a vomit color. Sorry, let me figure something else out. Okay, we'll go green. Wait, what are people trading on open? Sorry. Oh, the opening range gap. So basically we're looking at this dealing range from this high to the new week opening gap high, and then consolidation should occur at 50% that dealing range. It did, and then you have a trade opportunity when we work that out. As we taught in the swing grading lecture, it works into the opening range gap, doesn't hit the lower quadrant, very weak. That means it's very weak. And we have a reason to go lower because of the liquidity void, so very easy sells. And because it displaced through the pre-market low, you can get another sell down here. What are the odds of the N walk to get filled now before a potential reversal? What are the odds of the N walk to get filled? Oh, I would say they're probably pretty high because we left this breakaway gap. We worked into this. It's just a very small wick. Well, let's check what ES is doing. Yeah, I'd say it's pretty high. But that's not prediction, I'm just saying my opinion. And you've got another gap here. I was wondering for future reference. Yeah, I wouldn't look for a reversal right now because we've still got the new week opening gaps void. So although we've tapped into the N walk, we haven't filled in the void yet. The void's here because we've got this as our new week opening gap, and then where does it actually fill in? It fills in all the way down here. but it hasn't filled in at all to this. There's no price action. There's no, price being given. There's no order being placed anywhere in this green rectangle. So you just sit and wait for this to be filled. A ICT said the same thing. Anyone else doing all about PDRA over quadrant levels? Yes, very much, very much, especially when it's not a quadrant from a realized dealing range. This is unrealized. Well, now it's realized, but it was unrealized. Because the fact that you can draw where price is to where you believe price is going to go and then get levels from that behaves so algorithmically. Amazing. You can even go to the liquidity void. See what this gives. I think the new week opening gap high is better. If you are in cells though, take a partial because just in case it does reverse on you before filling in the void. But I do think the void's going to be like the magnet here. You're usually not going to get this close to something that's completely unfilled after that many days and just ignore it. So I'd probably expect it to trade low. Reclaim this gap. That's a very easy read. These are the days you have to take advantage of though. On a week where there's no news, like we haven't had a single high impact news event. We had bank holiday on Tuesday. Like you don't expect great price action from the week, but then there's always going to be that one day, that one session that really just delivers. Morning lumber. Hello man. Did you get those cells? Out of curiosity. Not today, later charts all week. What can you do? Ah, it is what it is. It is what it is. I was just asking because we called it. Potential layup for a market maker model, but I wouldn't consider it yet until we fill in this void. Like we mentioned at the start of the stream, to see this be a market maker buy model, I'd want the new week opening gap to be filled, not just trade up from here. I don't really care to see it trade that high if it trades up. I'd want to be suspecting any rally higher as a fake rally higher to trade down into this liquidity void. I don't trust this. See this move higher? I don't trust that. And see it react off one of these levels and then trade back down into the void. And then we can create a market maker buy model, hopefully. Ideally. This is ICT 3 minutes ago. Same bias. And he also said this, which is basically the exact same thing I said. Left the highs, discount opening range gap, NWOG, sell side. Maybe I am ICT. What's up, ICT there? What's up? What's up, Dennis? What's up, Otaku? I can't trade trader. Can't spell Valeric without IC. Are you looking for longs? Not yet. I want to see us fail a rally higher, so I want this to be a Judas, and then it trades lower and fills in the liquidity void inside the NWOG. It's not that I'm against longs. I want to see longs, but I want to see it fill the void in the NWOG first, rather than just trading off the NWOG's high. Because we've got unfilled portion of the NWOG here, I don't want to see us leave that alone and then trade high. I want to see us use this, or at least touch it. I don't even care if it fills the entire thing in. I want to see it just get tap in here, and then rally higher. Can't spell Valeric without ICT. Yeah. Pro ICT trader. Wow. I am a pro. Yeah, I'll show you the dealing range. So the dealing range high is from the pre-market high, and the dealing range low is from the 10th November NWOG. Now we put this dealing range on at the very beginning of the stream before it traded into here. So like here, we put the dealing range on. And the reason for that was not because I'm guessing, but if the NWOG was the draw, then we can use this as a dealing range in advance before it even gets there as an unrealized or an implied dealing range, whatever you want to call it. And then obviously you can see these levels react very well. Lower quadrant aligned with the bearish value gap, starts right in the lower quadrant, consolidates at equilibrium. That's exactly what you want to see in a dealing range. Wicks out the consolidation, stays within the realm of the fair value gap, falls short of the lower quadrant, that's weakness, taps the fair value gap one last time, and then it gets that real nice run. I want to see this first presented fair value gap be enough to send it down to the liquidity void and then biceps. It's not that biceps can't occur right now, it's that if they were, I wouldn't consider it high probability because we've got such a strong pull down here, and I can't see us being completely flipped into a buy program before we fill in this void. That's just me though. If that doesn't make sense, just let me know and I'll try explaining it a bit better. I showed the 851, so my aim is done. 851, nice. That equaled the entire thing. 220 handles. That's sweet. Yeah, high of the NWOG. 220 handles. Wait a minute. A Zusi student caught a trade. Interesting. Selling signals in the Discord. Hey, this is free. This is literally free. AV, you ghosted me on Discord, so I'm asking you here, did you cash the London Insane move? The London Insane move? No, I did not. No, I was asleep. But I did, well, this is a bit of a promo slash flex slash whatever. I'll say it anyways. Nah, I won't say it. It doesn't feel right. But the roundtable members know. We weren't looking at the new week opening gap in the morning. We were looking at the relative equal lows, and the new week opening gap was from the open. I'm edging you. No, it's just. I mean, you know what? Fine. Fine. I'll show you. Let me load Discord up. Here. Relative equal lows are my target for the pre-market range. I want to see weakness on a lower time frame that suggests we're trading lower into it. And this was a sell. And then let's look at what actually happened in the pre-market range. The 4-hour relative equal lows. Look at that. How's that for delivery? How's that for edged? W, thanks. He's got me saved as Clinton as my contact name. Nah, you have no idea what the target is. The new. Wait, for what? For what? For now? Or for later? Or for earlier? For the day? Oh, well, our draw's already been hit. I was looking at the relative equal lows this morning. That got hit. And then at the open, we we're looking at the new week opening gap. And now I'm looking at the liquidity void inside the new week opening gap. Because I bet a lot of people, not here because I told you not to, on Twitter, ICT traders, pattern trading would have just taken this as a market structure shift. Fair value gap buy setup. But the reason I was against it is because the liquidity void is a very, very strong draw. And even if this would deliver, it wouldn't be very pretty. So that's why I said this is going to be a false move higher. And then the liquidity void is probably the next draw. I see drawn liquidity as one-sided. It's a multiple on some days. Yeah, but those days you just wait for one of the sides to get taken and then target 50% of the range and then 100% of the range. But you're always going to have drawn liquidities on both sides of the marketplace. If you can frame it very obviously that it's going to go one way, so you're very confident that it's just going to trade into the relative equal lows, or like we were this morning, into the NWOG, then, you know, that's fine. But if you can see it going both ways, then say out. Also, Clinton, you're literally in the private mentorship, but you're not ever going through the analysis. Come on. Buy, sell, buy, sell. I just don't see it today, maybe because I didn't have enough time in the charts. Yeah, maybe because you didn't go through the analysis in the morning. That would have helped. Short first presented gap, nice. Real good. I would hold that into the liquidity void. Why do I always bring up the Prime membership and stop promoting it? I don't promote it, and most people are not able to join unless you reserved a seat a long time ago. So even if you want to join, it'll just reject your payment and you can't join. So I will reopen it soon though. Like if you wanted to join, you wouldn't be able to right now. It's not open for you. Please don't reopen. Wow. Wow. Oh, Kevin, why? We need more people in the roundtable streams. There's literally like 5 people whenever I stream in the reverse psychology. Yeah, yeah. Don't worry, Attack is from Iraq. You can even join. I'm already in it. I don't want too many people diverting your attention. Honestly, I have plenty of time and it's easy to run. Order block over the lower quadrant of the displacement leg. I'm in. Ah. Order block aligned with the N log. I would have wanted it to go into the liquidity void first. I don't like this now. Because it's a very good setup, but it's not a very good setup for me because the liquidity void, I wanted that to be filled first, and then we fulfill this as a market maker buy model and trade all the way back into the highs. But if it's gonna be bullish, if it's avoided the liquidity void, yeah, technically it's strength, but I still don't like that I didn't fill this in because now it's gonna maybe want to run back into it at a later date, and that's just gonna be annoying. High resistance. It might fill in PM to take AM's liquidity and fill it. Yeah, it might. True. That's a very good point. We do have a bond auction today at 1 p.m. So the PM session should be good. It's a 30-year bond auction as well, so 30-year T-bonds. This is a good sign of institutional order flow. When you're overlapping the delivery lower with delivery higher in the same amount of candlesticks, roughly, obviously it doesn't have to be exactly 2, it can be 3 or 4, that's a good sign of institutional order flow. If you're consolidating through it and you're trading up there, but it's like 10 candles going through 2, that's not institutional order flow. Whereas when it's overlapping those 2 candles lower with 2 candles higher, and it's very, very direct, like you can see the inefficiencies are pretty much exactly the same. That's institutional, so it's very strong. Again, though, my perfect thing would have been if this got taken. It didn't. see if that's an institutional for integral on an inversion fair value gap when inversion first presented. Nah, it's already too deep. Just make a template for each one, or do you just do it manually? Do what manually? So grateful for the opportunity of trading. For real. For real. I have templates. Opening range gaps and opening prices. But I can't use multiple templates at once, you know. Right, and the colors of fair value gaps and rectangles. Yeah, I do that as well. Like, I have loads of templates. I always use them. First presented fair value gap, breakaway gap. But if it's like a first presented fair value gap, I'm not going to have an entire template to make it an inversion when all I do is change the color to orange. I'm grateful for this community. I'm grateful for the members of the community. Okay, we'll see how much of this we're willing to overlap. It's actually a very nice little bullet setup. You should be grateful I'm here. 50-50. 50-50. Okay, this is where if you're looking at it to deliver into the highs, you're basically looking at a market maker model. And if you're looking at a market maker model, you want to take PD rates on the left hand side of the chart and transpose them onto the right hand side of the chart. So these inversion gaps, these old highs, that if they act as a breaker, like if we trade above this, that'll be a breaker. If we trade above this, that'll be a breaker. You want to use the dealing range levels still. We can update the dealing range now instead of being from the and walk high, we can go into where we actually dug into, which is this low. And then now, hopefully we start to see discount arrays respected and inversion arrays respected to fill in the rest of the opening range gap. Take out pre-market high. I'm gonna have to get some work done. See you later. Thanks for tapering. Helped me a lot as usual. GG's. Goodbye. V, why'd you disable the option to go to your Reddit post from the past? I didn't. I haven't been on Reddit in months. Like, literally months. Okay, dude, I liked it. Chill. I was gonna enter, but I had no idea what I was doing, so no. Or you can demo trade. Could be a good way to get intel. What's a good way to get intel? Reddit. Targets. Targets. Go with this high. These are going to be relatively equal highs now. This one. You go for this high. You can go for the opening range gap, consequent encroachment. You can go for the pre-market highs. You can just take it off right here and be content with what you've already made. You can go for the opening range gap, the full closure. You can do a lot of things. Whatever you're comfortable with. Totally had my biggest day today, so need to chill. Yeah, just sit out, be done for the day. Just passed my fun date. Well done. What's your Discord username? Escape capture. I don't think I've seen you in Discord. Put it in Discord if you want. Well done, man. I'll take this off. Oh, Luke hand stuff. Nice work. Nice work. Oh, someone's gonna have a blue name. Blue funded name. Funded role. Oh, my old title back in Discord make me feel more special. Yeah, GG is no problem. GG. What, did the tape reading help? Hopefully it helped. Yeah, that's longs. Everyone got the longs. Just be cautious that we've got the liquidity void. I don't know if it wants to revisit that. I don't think it should now because we've already inverted so many PDRs. But if we break down below this gap, then yeah, I'd probably say we'll go back into the liquidity void. But that is going to be the end of the stream because we've already done everything that needs to be done really. I'm content with what we've called today. We got all the way from the open down into the NWOG. Missed the liquidity void, but then it ran higher anyways. Really good tape reading today. And well done everyone who got trades. GG everyone. I'll see you in Discord and I'll be back tomorrow, Friday stream. So goodbye.